Hello and welcome to Switzer Investing Insights, brought to you by nabtrade. And today we want to ask the question, is Macquarie in the buy zone? Paul?
Well, I think a good place to start with Macquarie, Peter, is to look at a couple of charts. First, to give a bit of a context, but this is Macquarie's chart over the last 10 years. That's a pretty impressive chart, right?
Yes.
I really like companies that can show that sort of growth and very consistency of growth and dips being bought. So that's the first positive.
It makes shareholders smile, a chart like that.
Yeah, and look, you can see it with Macquarie, you see it with CSL, it's in that sort of league, right? Maybe Goodman Group, there's two or three companies in that sort of nature. This is what it looks like over the last 12 months, and you can see we've had this really big drop since its profit result the other week.
Which was a good profit result.
Yeah, and I'll come to that in a moment. But, it was trading around about 205 down to about $180. And I guess the other thing to take from this chart, Peter, is quite a lot of support around there, around the $160 level. So that just sets the scene on the Macquarie profit result. Let's go to the full-year profit result because there really were no problems. It was a great result, right? So why did the price drop? I'll come to. But look, it was a record and it was a clear beat. So a full-year profit of $4.7 billion. You know, it's right up there in terms of our leading companies. Up 56% on the previous year. The second half profit, this is of course after tax, was $2.7 billion. That was up 30% on the previous half and up 31% on the corresponding half in 2021.
Once again, good results.
Good result, ahead of analysts' forecasts and all very, very positive. One little negative was that the final dividend of $3.50 per share, that was a bit under what analysts were expecting, more like around about $3.60. That's about 40% franked. And I guess they took away that was Macquarie being a bit conservative and so forth. Now, just a couple of points about Macquarie and how it gets its income. First, the point to understand it really is international, right? 75% of Macquarie's income comes from offshore.
Proving it's international.
Yeah, we all think of Macquarie as a great local bank and it's done really well, but it's a global investment bank. It's more offshore than it is onshore. And that says something about the way it's grown over the years. But just taking that one step further, the Commodities and Global Markets division, that's a trading division, that made 31% of the profit. And sort of that leads to sort of the questions why the market's reacted, because the market sort of says, well, when you get 31%, which you get from sort of really buying and selling and trading and arbitraging and hedging the commodities markets on behalf of customers, we all know that the oil price has gone through the roof. We know that soft commodities like wheat have gone through the roof. We know that iron ore and other commodities have had really bullish times. But if the economy slows and we get more of a recession talk, some of that interest in commodities will go, and that sort of the sustainability of that trading income is going to be really hard to repeat. So I think that the reason the market sold off was a little bit saying, well, they can't do any better than that. That's as good as it gets. We have concerns about the sustainability, particularly of some of these market-facing businesses, and to be honest, Macquarie has no control about how that goes, right? That's down to the markets, it's down to the people they have. You know, in some cases you could say it's tossing a coin, they just toss a coin better than others, right?
That's right. And the CEO did not offer strong guidance, did you?
No.
She kind of held back, not sure?
Yeah, so and that was sort of the last factor, was looking at the environment and also pretty cautious guidance. In other words, Macquarie's got a reputation for being conservative, but there wasn't any really positive, bold outlook statement. It was just like, we'll do the best we can.
And what's interesting, Paul, is that if we don't get a recession, if interest rates don't go as high as people expect, Macquarie could have a real good year. So once again, making the point, this could be a buying opportunity if we don't get recession.
So I think that was the market saying, look, great result, but we didn't hear anything about how it's going to go next year. And so, well, maybe they can't do any better than this. And that's why we've seen the price come off. Let's go to what the brokers say. So this is the 6 major brokers who follow Macquarie, according to FN Arena, and their target prices and their recommendations. You know, there were a couple of changes here post the result. First of all, Credit Suisse went to an underperform. We saw a couple others do a downgrade to neutral. There was one increase to an overweight position from Morgan Stanley, but overall, a slightly more conservative tone from the major brokers. The target price, a fair bit of range there, from a low of $150 with Credit Suisse through to a high of $245. But the actual consensus, Peter, moved down a bit, right? And I think that's what was reflected. And we saw
if the CEO is cautious, why wouldn't analysts be cautious?
So we saw a slightly more cautious tone from the analysts. Looking ahead, the analysts also actually think earnings are going to fall next year. So this is where I come to sort of as good as it gets. So, you know, this year, on earnings per share basis, Macquarie achieved 1,271 cents, just under $13. Next year, the brokers are factoring in only $10.57 before rising again to $10.95 the year after. That puts Macquarie on a model of about 17 times next year's earnings, FY23, and 16.5 times FY24. So I think the brokers are being a bit conservative, but they're saying, look, a lot of the the income is sort of one-off stuff. We're not unsure about the sustainability, and that's what we saw. So that's why the price has come down from around $205 to roughly sort of that $180 mark.
So is Macquarie in the buy zone, Paul?
Well, look, I go back to the starting chart, Peter, which, look, to me, a company that has that sort of track record, you buy on dips, right?
Yeah.
Macquarie is a great Australian success story. I don't think the international market is going to be as tough as people make out. I'd like to see China come out of lockdown.
Yep.
I'd like to see some of the inflation bogeys go. And if they get worse, well, maybe Macquarie, like other investment banks, is going to struggle. But I think Macquarie's a stock to back. This is an opportunity. I think your downside, you're probably saying, is about 160. It looks like a reasonable position to for portfolios who could be a little more patient. So, to me, Macquarie should be a core portfolio stock.
Yeah, and from my point of view, it's about $180 now. I wouldn't be surprised to see it at 200. If I can make $20 on 180, Paul, well, I say 11 or 12%, I'm quite happy with when you're investing in a pretty good quality company. That's Switzer Investing Insights, brought to you by nabtrade. Thanks for joining us.